नमस्ते। आज हम गोल्ड के बारे में बात करेंगे। In this video we will cover the following: how much gold does India really have? Why should you invest in gold? What are the different investment forms? And lastly, we'll conclude with how can you go ahead and invest in gold yourself today in various forms. So let's get started. How much gold does India really have? India is considered to be the largest holder of this precious yellow metal. According to the World Gold Council, India accounts for about 25,000 tons of gold. In May 2019, the World Gold Council shared that almost 40% of India's GDP is in form of gold, which is about $1.1 trillion. That's just crazy. India has a history of being extremely sentimental towards gold. Gold is deep rooted in India. चाहे धनतेरस हो, दशहरा हो, कोई भी अच्छा फेस्टिवल हो, normally Indians will go out shopping and getting some gold. It is considered the safest investment by Indian households, and there is a reason for it. If you see all the major currencies in the world in the last 2 decades, gold has actually outperformed most of these currencies, which means currencies have depreciated with respect to gold over the last 20 years. Let me throw some more stats at you. 75% of Indian households have own some form of gold with themselves, whether that could be gold coins, gold biscuits, or any other form. And out of the 25,000 tons of gold that India actually has, 50% or more actually is owned by middle income households in India. That is just mind-blowing. Let's take a look at this chart. This chart shows you that gold is not only the safest investment, but also given some handsome returns to its investors. In the coming weeks, I'm going to do asset breakdowns. Similar to gold, I'm going to go asset by asset. So if you liked this video so far, make sure you subscribe and like and share with your friends. Let's get into the various gold investment forms. I'm sure you have some questions about gold. Now is a great time to put your question down in the comment section. Why should you invest in gold? That's a great question. Gold is safe, gold is liquid, you can sell it any time. Gold has given good positive returns over a large period of time, decades and even centuries. To give you a sense, gold investment returns have been in line with inflationary rates. What this means is the value of your money has not depreciated over a period of time. At least you've made, or the utility value of your money has remained same over decades if you've invested in gold. And you can invest gold in really easy and multiple forms. You can go to a store and you can buy physical gold or gold coins. You can go online and on Demat you can buy the sovereign gold bond scheme. Or if you want really high liquidity and in small quantity, then you can just buy gold ETFs or mutual funds. Gold has shown a negative correlation with inflation. What that means is, in today's world economic environment, if you see, high liquidity has resulted in a lot of inflation. So gold is a good hedge against that inflation because gold has shown to have given returns equal to inflation over a long period of time. It also has a low correlation with equity. What that means is, while equity has shown to go down with inflation, gold has actually low correlation with equity. Thereby, you can diversify your portfolio so that gold at least stabilizes your total portfolio returns. You may ask, well, what causes gold prices to fluctuate? Right? It depends on how reliable, how stable is the central bank and the central government of a country. Obviously, supply and demand play a part in the prices of gold. What is the domestic demand in a country like India, which has high domestic demand, high household demand of gold? Then probably the prices are going to increase significantly. Thereby, giving you great investment returns if you've been a long-term gold investor. It's also extremely dependent or highly correlated with the US Federal Reserve policy. Those are various factors by which gold prices fluctuate, and you as an investor can take the benefit of the fluctuation or the volatility that happens in gold prices. Now let's take a look at what are the various forms by which you can invest in gold. There are 5 main forms. The first one is physical gold. If you take a look at physical gold, you can just go to a Tanishq store and buy gold coins, right? It's easy to buy. You can buy gold biscuits or gold bars, or you can buy gold jewelry. You know, India has a lot of sentimental value and it's considered auspicious as well, where you go in and you buy gold jewelry. Now, be careful that gold in physical form can be stolen, right? There can be theft, there can be robbery. You have to take care of storage if you're buying physical gold. You have to put it in banks or at home, and it needs to be safe because it's in physical form. Now, that is not the case with some of the other forms which I'm going to cover very quickly. One quick note about physical gold: there are applicable taxes on this depending on short term or long term. Short term means if you buy physical gold and sell within the first 3 years, whatever is your income tax slab that you fall in and the profits that come in, it will be considered as income and you have to pay that income tax. However, if you're a long-term investor, more than 3 years, then you fall under the category where the taxation is fixed at 20% after indexation. So think about this when you want to think about buying physical gold. The second form is digital gold. This is becoming extremely popular with the youth today because the simplicity with which you can buy digital gold. You can just go on an app and buy it, whether it's Zerodha, whether it is any other platform that you go through, right? So digital gold is what it says. It is in digital form. It's not in physical form. Now, mind you, digital gold does not come under any regulatory body yet. So it is on one hand, the pros are you don't have to worry about theft or robbery because it is in digital form. But on the other hand, if it doesn't come under regulatory body, you have to question whether it is legal and whether there are any implications of buying digital gold, right? To give you a comparison, cryptocurrencies are not legal in India, but they are taxed by the RBI, right? By the Indian government. And so similarly, digital gold is also taxed similar to what is the taxation for debt funds, right? Which is typically 4% to 7%. That is the taxation. So digital gold is extremely easy to buy, and that is your second form of gold investment. A third form of gold investment, and the one that I do significantly, is sovereign gold bond, right? These are government-backed securities. The government of India, RBI, they are essentially saying that if you buy a sovereign gold bond scheme, then the safety is that the government of India is backing this investment of yours. Now, this is very easy to buy. Any centralized bank, any private bank, you can just go to ICICI or you can go on SBI and you can tell them, I want to invest in the sovereign gold bond scheme that has been published recently, right? Depending on the price. And then you can invest in this sovereign gold bond scheme up to 4 kgs, total 4 kgs. That is the maximum limit that you can buy. It comes in smaller denominations, it's in electronic form, there is no chance of robbery, and so easy to do, easy to purchase. The one caveat to sovereign gold bond scheme that it's a bond over 8 years. So if you buy today, the maturity happens after 8 years. The benefit of investing for such a long time is that after the end of 8 years, whatever money you make is tax-free. There is no tax applied to the upside of the profit that you make by investing in gold. What is the upside? You know, the gold prices have shown to be in line with inflation. And so if it increases 7%, 10% year over year for 8 years, imagine the amount of money that you make, which you don't have to pay a tax on. To give you a kicker, the government of India has said that if you invest in SGB each year, 2.5% interest is paid on this gold sovereign gold bond scheme investment that you make. So every 6 months, this interest will hit your bank account where you get money by the government for investing in sovereign gold bond. I love this investment vehicle of gold because I don't have to worry about robbery, and the government has incentivized it by making it tax free, and it's also very, very easy to manage and long term. You know, if you're investing in gold, you're already thinking about long term, 10 years, 20 years, because it's not like the volatility of cryptocurrency, right, which goes up and down very, very regularly, or stocks, which is kind of shown to be cyclical depending on the economic cycle, right? Gold, on the other hand, you're thinking about 10 years, 15 years, 20 years, 30 years. And so this is where I think sovereign gold bond scheme can be your third, but one of the most best investment vehicles in gold. The fourth investment option for investing in gold is gold mutual funds. Now, gold mutual funds are like any other mutual fund. You can go online and you can buy gold in its electronic form. Again, there is no chance of robbery. It is highly liquid. If you want to sell it tomorrow, you can sell it tomorrow. If you want to buy it in small quantity, you can buy it in small quantity. You want to do it on your app, on your phone, you can do it on your phone, right? If you want to go to a bank and buy it, you can do that as well, right? So there are various options by which you can buy gold mutual funds. The taxation slab in this case is that of similar to the capital gains tax on debt funds, which is about 4 to 7%, right? And that's kind of pretty standardized across gold mutual funds, gold ETF, and gold digital gold. Here is a list of 5 top gold mutual funds. Now, as you can take a look at it, you know, most of the private banks, HDFC, Kotak, etc., Axis, they are offering these gold mutual funds. There is very little difference between them. Now, that being said, what's rule number 1 in investing? You need to know all the details and you need to do your own research. So before you even put a single rupee, whether that's in physical gold, SGB, or digital gold, gold mutual fund, or gold ETF, make sure you read all the document. It will take you 2 hours, 3 hours, maybe 2 days. Talk to a few people, but make sure you understand each and everything about it before you put your hard-earned money. Now that brings me to the last investment form in gold, that is gold ETF, that is exchange traded funds. Now gold ETFs are in electronic form. Again, no chance of robbery over here. A key point for you to note over here really is that one gold ETF unit equals to 1 gram of gold in the highest purity. Now that is very important, right? If you try to go and buy physical gold at any jewelry store, वो टेंशन रहता है कि कितना प्योरिटी है, सच है कि नहीं है, उसमें कोई प्रॉब्लम या घोटाला तो नहीं है, राइट? नाउ नो वरी ऑफ दिस इन डिजिटल फॉर्म और इन गोल्ड ETF or gold mutual fund or SGB. You know, the purity is kind of taken care of, which is another important point for you to think about. It is taxed similar to the capital gains tax for debt funds, which is about 4 to 7%. Again, read the documents very carefully, and you can invest in any of these 5 top gold ETFs. They're very easy to look up. There is not much differences between these top 5 gold ETFs, and you can't necessarily go very wrong, okay? So it's very easy to do. It's highly liquid. You can sell it whenever you want. You can invest in very small amount of money if you want to. So you don't have to worry about, you know, do I need this much money? Like if you wanted to buy a gold biscuit, you would need higher amount of money. But in gold ETF, you know, you can put a few thousand rupees, few hundred rupees and buy that as well. Right? So it's very, very simple. Now these were the 5 different investment forms in gold. I'm sure you have a lot of questions. Now is the time to put a comment below and ask me these questions, and I'll try to create another video and come back to you answering your questions, right? Another part is I do these asset breakdowns. I hope you enjoyed this video so far. I'm going to go down asset by asset where I'll be breaking down each and every asset. why invest in that asset, how does that investment work, what are the returns, historical returns, what are the things that you should be mindful of, and many other things to talk about. So make sure you like, subscribe, comment, share with other people, because my focus is financial literacy. If you are aware, if every person is aware what they are putting their hard-earned money in and how much money they can make from it, there is a high probability of achieving financial freedom, which is all that I am about. I really want to help Indians become financially independent, so they are not stuck in jobs that they don't like, and they are doing the things that they love and are meaningful to them. And money plays a very important part in that. So I hope you've loved this video so far. If you have any questions, please drop them in the comment or reach out to me. And I look forward to seeing you next time.